Good morning, everyone. Thank you very much for your subscription and presence here on the webinar, Invest in Chinese Bond Market. It's a pleasure to be with you today. I've got here today, besides myself, Francisco Oliveira, I'm the board member of Bison Bank in Portugal. I also have here with me Mr. António Aranha, which is the founder and board member of LYNX Asset Managers. Also, Mr. Pedro Rodrigues, which is the head of wealth management of Bison Bank. Mrs. Rita Neves, which is the head of investments of LYNX Asset Managers, and Mr. Nuno Correia, which is the head of client management of Bison Bank. Now we are going to kick off a short video on the Bison Flexible China Bond Fund, and then we'll speak after.
Bison China Flexible Bond Fund is a diversified bond fund that is exposed to the sovereign and corporate debt of the largest Chinese financial companies and institutions. The fund is available through three types of shares: in American dollars, euros, and yuan. Investing in the Bison China Flexible Bond Fund provides access to the largest Chinese institutions with high credit quality. Investing in the fund means having access to the economic potential of China and to the second largest bond market in the world, starting from a minimum amount of just 20,000 American dollars or 15,000 euros or 120,000 yuan. The fund has daily liquidity, which provides more flexibility on subscriptions and redemptions, according to the terms defined in the fund's prospectus, and is intended for investors that aim to have their capital invested for at least 3 years. By investing in the fund, you will have access to an experienced and dedicated management that will favor an adequate degree of diversification throughout different sectors of activity and market segments. Be part of an innovative fund and invest with us in the Asian bond market.
Okay, so first of all, let me present myself. I'm the board member of Bison Bank here in Portugal. I have more than 25 years of experience on the investment banking markets. Also, I worked more than 16 years of Barclays in Portugal. Then I moved to a family office here in Portugal. Also, when I was in Bison Bank, I was also working in Portugal, Spain, London, and France. And then in 2016, I was invited by Bison Group in order to buy the license, what is today Bison Bank. So Bison Bank was born in 2018, July 2018. It's a bank that comes from the Bison Group, which has more than 15 years experience in the mainland China. A group that started with the media, healthcare, insurance, and also tourism sectors during these 15 years. And then there was the need to buy a banking license in order to complete the group. So this license was bought in 2018, as I mentioned, and the structure, our shareholder is a shareholder that is based in Hong Kong. And we have the license here. It's a full banking license here in Portugal, which is mainly dedicated to the client management, wealth management, and investment banking services. On the client management side, which we have here today, Mr. Nuno Correia, as I mentioned, we are the front door and the main area to onboard clients and to manage the wealth of the clients. Then on the wealth management side, as we have here, Mr. Pedro Rodrigues, we'll have all the products and services to manage the wealth and anything needed for our clients. And then we have the investment banking area, which is an area that is more focused on the M&A, debt capital markets, and also on the valuation side. Finally, it's also important to mention that Bison Bank has a huge experience on the depositary and custody service with more than 900 million of assets under management. And the main goal here today is to present to you the fund that we have together managed to build up with the LYNX Asset Managers. So it's with great pleasure that I pass the word to the founder of the asset management company, Mr. António Aranha.
Hello, everybody. Good morning. It is a pleasure to be here with you. presenting LYNX. The good news is that I'm most experienced than Francisco, but the bad news is that I'm very old compared with him. So let's be focused on the LYNX activity. As you know, LYNX is an independent management company with majority of the participation belonging to the management team. It was founded in 2008 under the and it is a management company under the supervision of the Securities Market Commission. And we cover, with our license, we cover almost all the range of the funds in its activity. At the end of 2020, we managed about 46 different investment vehicles, and we have reached more than 1,074 million euros. Our organization is very simple. Each board member controls a single department, but every board cares as a whole with each and every department. We are for different areas, and we manage mutual open-end funds for vehicles, 2 specialized alternative investment funds, 8 real estate closed-end funds, 14 SICAVs, and 18 private equity and venture capital funds. Just to summarize a little bit of this type of funds, we have one treasury fund, which is a commodity only for cash management, one flexible conservative balanced fund based on bonds risk, 2 flexible balanced funds based on the stock risk and with different risk to return profiles, 2 specialized alternative investment funds. One is the Portuguese Forest Fund, which is only open for institutional investors only, and the Bison China Flexible Bond Fund, which came to is the reason why we are here today. For the other activity, we are very strong on the management of real estate and private equity funds. We manage at the moment 22 closed-end real estate investment vehicles that included funds and SICAVs, and we are developing the real estate business in urban rehabilitation, residential, tourism, hospitality, and retail, located mainly in Portugal. LYNX also manages 18 closed-end private and venture capital funds with an advantage and stable environment in terms of legal and tax framework, and we cover any kind of sectors, but mainly education to tourism, energy, technologies, construction, among some others. The fund are also we are also be investing in Portugal, Spain, Brazil, Peru, or United States of America. And finally, before passing my work to Pedro Rodrigues, why does LYNX chose Bison Bank to be with us in this project? Well, as I said, LYNX will be focused on the management portfolio, and we need a strong institution with strong roots on that market. So that's why we chose Bison Bank to link us to the Chinese market, to the Chinese players, and to help us to build a strong link to each investor. So thank you once again, and I will pass you my word to Pedro Rodrigues.
So I will cover a little bit the environment of the Chinese economy and the Chinese bond market in what is the framework for this fund that we think would present very good opportunities for investors in terms of profitability in times where, you know, in Europe and the US, interest rates are very low, and the search for yield, I think we can have a balanced search for yield with a decent amount of risk, a controlled risk environment with this Bison China Flexible Bond Fund. So to start, just to give you a brief overlook of how Chinese economy stands right now in the world figure. So China is already the second largest economy in the world after the US. And nevertheless, and because of the huge number of population, in terms of GDP per capita, it's still lagging most of the developed countries. We expect this to change, and we expect that China is, of course, on path to leave the emerging world and integrate the developed world in the next 3 to 5 years. This usually it's given by, you know, a figure of $12,000 per capita, which, as I said, we expect China to achieve within 3 to 5 years. So China will be more and more a developed economy with all the good things that this represents in terms of development and economic growth. As you can see here, also, even with the recent pandemic or the pandemic that we are still living on, this, of course, had a huge impact in economies all over the world. To this respect, it's unbelievable to see how China was able to be the first country to reopen the economy and to regain the growth path that it had before the COVID situation. As we expect most countries in the developed world to achieve only pre-COVID levels of economic growth in 2022, China is already on pre-COVID levels or above those levels, and we expect China's economy to grow around 6 to 7% this year. As a matter of fact, 8.1% this year. So here we can see that, of course, the impact of the pandemic in the Chinese economy was also very, very large. Nevertheless, we didn't see and we didn't experience what had happened in all of the rest of the developed world countries, where we saw decreases in GDP, while in China, the economy was still able to grow at 2.3% in 2020. So in 2021, it will recover significantly, so growing at 8.1%, and then continue the path of mid-single-digit growth in the next 5 to 10 years. Recently, it was announced that the 14th five-year plan by the Chinese authorities. Here you can see the main guidelines that will follow this plan. So economic development, this is always on top of the table, and China is seeking to replace high-speed growth with high-quality growth, meaning that China wants to move from being an export-driven country to a domestic consumption-driven economy. And this, of course, requires some changes in the economy and in the structure of the Chinese economy. But this is the plan, and it has already been the plan for a couple of years, and this will speed up in the near future. For this, the economy needs to be rebalanced with supply-side structural reforms, since it has to supply all goods for the domestic consumption and a growing middle class in China. One other thing that it's already very much in focus in Europe and the US, more in Europe, but China also wants to catch this trend, which is becoming going green in terms of production, in terms of energy consumption. So China still has a long way to go, but it's within this transformation, and it's expected to become carbon neutral in 2060. Also, in this plan is the intention to significantly reduce the gap between urban and rural development standards. So this will also contribute to the development of the internal consumption economy that China wants to have. So these are the key messages about the China macroeconomic environment. China will keep on leading post-COVID recovery in economic terms worldwide. It will be the engine of economic recovery. For this, it will have the support of the People's Bank of China, and that will remain supportive of and create the conditions for the recovery to be on track. And also markets, of course, are pricing this already, and financial markets are showing that investors are very excited about all these prospects of economic growth for China. In terms of what the Chinese bond market is concerned, similarly to the economic standards, the China bond market or fixed income market is already the second largest market in the world. It has surpassed Japanese fixed income market in 2019, and it's only lagging the United States, as you can see in this graph. So it's becoming more and more important, and it's something that, as we usually say, it's too big not to miss. So something with this dimension and this scope, it's bound to be on the radar of every investor and will present many opportunities for investment in the near future. China fixed income market, it's divided in what we call the onshore market and the offshore market. The onshore market is the domestic market traded in mainland China, while the offshore market are Chinese issuers that use usually the market of Hong Kong to issue bonds either in offshore renminbis or in euros or in dollars. The difference in terms of size of these markets is huge, as you can see here. So it's really dominated by the onshore market, and it's something that authorities in China have been trying to open up to foreign investment. For a long period of time, there were many restrictions about foreign participation in what concerns the Chinese onshore market. All these restrictions have been lifted step by step. So now market participation by foreign investors is becoming more and more accessible, but still you need to be an institution or an institutional investor to access this market. Therefore, the only way that we think that individuals and private investors have the means to access this onshore market is via a fund like the China Bond Fund that we are presenting right now. So as you can see, the market is huge. It's $16 trillion of amount of outstanding. And another thing is that we can access many sectors of the economy and all of the government yield curve via the onshore market. The offshore market is much more directed to financing commercial banks and real estate linked companies. This is how the onshore market is structured, meaning that one of the steps that the authorities have done in the near future, in the past recent future, was the creation of the interbank bond market, which represents fairly 2/3 of the market, and it's the easiest way for institutional foreign investors to access the market. this is how the amount of outstanding is composed. So as you can see, government-linked entities dominate the issuance, mainly central government with 26%. Then we have local government bonds with 34%, and we have what is called the policy bank bonds with 25%. Market participation of foreign investors is concentrated in central government bonds and policy bank bonds. Local government bonds are still a little bit more opaque in what concerns transparency and ratings, and therefore foreign investors are still shying away of this segment of the market. Here you can see the increase of foreign market participation in recent years, and as you can see, more and more foreign investors are participating in this market and taking advantage of the good returns that this market has been offering in the past few years, and will, as we think, continue to offer in coming years. It's just a little dimension of also the market participation in government central bonds and policy bank bonds, which, as you see, after the last measure of Chinese authorities to open the market to foreign investors in 2017, you can see the spike of participation in these issues of these three issuers. One thing that concerns many foreign investors is the way that the quality and the risk of the market. Most of the issuers are followed by domestic rating agencies, and only now the three known international rating agencies are coming to the market. So Standard & Poor's recently entered the market, and Moody's and Fitch will follow shortly. This is also one sign by the Chinese authorities that they really want to open the market to foreign participation. There was always a little gap between the standards of ratings between international agencies and domestic ones. So some investors were still not very comfortable about the transparency of the ratings of domestic issuers. This is also coming together, and more ratings will be comparable, and we can look at Chinese issuers like we are used to look at Western world and developed countries issuers. So in terms of defaults, as you can see, defaults have been coming down in the past 2 years. This has much to do with economic growth worldwide, and even with the so-called trade war between the US and China, ratings have been coming down, and the recent pickup in defaults in the past 3 to 4 months are most concentrated in SOEs or state-owned enterprises, which finally also the authorities are passing a message to institutional investors that and to companies that companies have to have good and sound financial statements, and they have to really comply with all the interest payments so that they don't default. I think one of the main messages that we think that the Chinese fixed income market can offer clients and offer investors is diversification. So the Chinese, as you can see here about the correlations, China is in fixed income market is very non-correlated with other market segments, especially with US government bonds, and even with other high risk segments like high yield US bonds. Therefore, this is a very good way to diversify a portfolio and to have a non-correlated part of the portfolio to profit and to offer additional cushion to the portfolio. So China continues to develop as a unique and separate asset class, and offers important diversification benefits for investors' portfolios. One other thing that it's a little myth is the volatility of China bonds, China fixed income space. What's interesting is that China fixed income offers higher returns, or has offered, and these are numbers for 3 years, has offered a higher level of return with a lower volatility compared to US, for example. I mean, if you see even in the investment grade space, in the US, volatility 9 against 3.4 in China with the same level of return. And even in the high yield space, volatility of 10 in the US compared with 8 for China, and China, returning almost double than what US high yield credit has returned. And even if you look at government, it's the same thing. So very low volatility for China compared to the US, with higher returns. So this is almost a win-win situation, and it's something that we think will give this fund a very good prospect and the place in everybody's portfolios. Just one last slide to show the average returns that we have seen about the China offshore US dollar bond market. Of course, the issues in US dollars are a little bit less in terms of returns than they present in the onshore renminbi market. Nevertheless, as you can see there, for the iBox China offshore US dollar bond, the returns of the past years are high, and if you look, always in the mid to high single digit returns, which is of course in today's environment of negative and almost zero interest rates in the developed world, it's something that it's unique. One last slide about the spreads and year-to-worst comparison between mainly China and the US, both for investment grade and high yield. And as you can see, there's still a gap between, in terms of spread and yield, between US and China. So we think that as China represents the engine of world economic growth, this differential will tend to tighten, will tend to decrease, and therefore we think that everybody can benefit from investing in Chinese fixed income space. Thank you very much. I pass the word to Rita Neves, that will explain a little bit better how the fund will be structured. Thank you.
Thank you, Peter. Now I will explain a little bit how the Bison China Flexible Bond Fund will work. Investing in Bison China Flexible Bond Fund is a way of being invested, as Peter told, in the second largest economy in the world. Is a way of being invested in the second largest bond market of the world. Is too big to be ignored. Investing in Bison Flexible Bond Fund is a way of be investing in the diversified bond fund. The fund will invest in government and corporate debt of the largest financial companies and institutions. Be invested in this fund is a way of being invested in a dedicated portfolio with a manager by an experienced team with a minimum investment amount of $20,000, 50,000 euros, or 120,000 renminbi. The fund was specially designed to get access to the Chinese issuers with high credit quality. The portfolio will be, on average, largely exposure to the A- rating. This type of issuers generally have a considerable minimum investment amount greater than 200. So you can invest in a lot of issuers by the same amount of just one issuer if you do it alone by yourselves. The fund was specially designed to have a low operation costs. Summing up, the fund wants to capture the economic growth of China, carefully picking sectors and issuers, and to capture the expected positive impact of the increased weight of China in the main international index. The fund is an alternative open-hand fund under the Portuguese law. It's a flexible investment fund, which means has no constraints in terms of duration. Manager can invest along the Chinese yield curve according to the economic scenario, has no constraints in terms of index. The manager can pick carefully sectors and issuers. The fund will be dominated in 3 categories, A, B, and C. Each one corresponds to 3 different types of currencies, dollars, euros, and renminbis, which the fund can be redeemed, subscribed, or valuated. The main objective of the fund is to provide investors an actively managed portfolio composed by high-quality assets, very liquid. The fund will invest at least 80% of net assets in Chinese bonds funds diversified by issuers, sectors, and currencies. On average, the fund expects to reach above the benchmark 1%. The fund has its own benchmark, is a composite benchmark that is 50% of 2 years government debt interest rates of China, plus 50% of 5 years government debt interest rates of China. For instance, for example, if you have a 3 years daily average benchmark, returns around 2.9%. So it is expected that the fund on average gives in for the same period a 3.9, around 3.9%. In terms of the distribution policy, the fund will accumulate, it will be an accumulated fund. There is no distribution. The minimum recommended investment periods will be 3 years. The manager, to have control of a fund risk return, will have some limits. The manager can invest up 100% in money market instruments and money market funds, if increased just in extreme scenarios, because the fund will mainly be invested up to 50% in Chinese government bonds or state-owned enterprises, up to 30% in bonds issued by Chinese companies with investment grade ratings, and have 50% in bonds issued by Chinese financial institutions with investment grade rating. The fund can invest, the manager, up to 30% in bonds of high yield Chinese issuers and just up 10% in bonds of Chinese issuers with no rating. You can see the fund pretends to invest in high quality credit issuers. The fund can invest up to 50% of direct investment in renminbis. The other 50% has to be invested in dollars or euros. The fund manager also can invest up 20% in bond funds. Here we have an example of a portfolio where we can see the diversification of the fund and the quality of the fund. You will invest through a lot of issuers. We will invest between a lot of sectors, and you can have a diversification exposure by currency. In terms of risk, the fund will be dominated at risk 4. It means between 5 to 10% of volatility. Of course, the fund is a bond fund, so it is exposed typical to risks of fixed income markets, the risk of interest rates variations, and the risk of the issuers and the currency risk. In terms of subscription terms, the minimum, as I told you, for the first subscriptions is $20,000, 50,000 euros, or 120,000 renminbis. For the subsequent amount, you can just invest with $1,000, 1,000 euros, or 7,000 renminbi. In terms of the fees, the fund don't have any subscription fee. And in terms of redemptions, remember that the time period to be invested recommended is 3 years. The fund just will have 0.5% up 90 days, and after that, it will not have any subscription fee. The total expected costs for the fund will be around 1.5%. Thank you. I will pass the word to Nuno.
Well, good morning. My name is Nuno Correia. I'm the head of client management here at Bison Bank. And it's a pleasure to be here with you. Good morning also to my colleagues that are presenting this fund. I'm going to very quickly explain you how to open an account with us and how to subscribe this fund. So it's quite easy. The first thing you need to have, it's the Portuguese tax number. If you don't have it by now, we will need to find here in Portugal a tax representative in order to apply for the tax number. We can help you with that. And with the tax number, we will be able to open your account. We will send you the editable forms for the account opening. We will schedule video call with you in order to help you filling the forms, also to explain everything regarding the Portuguese financial market and how the account will be managed. And after the forms are completed, you just need to sign the forms and send it back to us by DHL or UPS from wherever you are to Portugal. With your forms here, we will also need just 4 documents. The copies of the passport, proof of address, proof of your professional occupation and income, and your local tax number. Those copies, they will need to be certified. Again, a legal representative here in Portugal, a lawyer, needs to do that certifications, or you need to have it notarized and apostilled where you live. But with those 2 pieces, with the forms and also the documents, we will be able to open your account. We will send you the IBAN, the international bank number, so you can transfer the amount that you want to have in this account. And then with the subscription form that you can also send by email, you will be able to subscribe the fund. So it's a very simple process. Completing the forms with our help, it takes less than 30 minutes. And the account will be open after we have the original documents with us. The account will be open in 3 to 4 business days. So it's a quite simple process, very efficient, and we will be delighted to have you as our client. Thank you.
Okay, thank you very much, Nuno, and thank you all. We are almost finishing our webinar regarding the invest in the Chinese bond market and regarding this partnership that Bison Bank has with LYNX Asset Manager in order to distribute the Bison China Flexible Bond Fund. This is a fund that, as mentioned by Nuno, is available for distribution in Bison Bank. This combines the expertise of Bison Bank in the Chinese market together with the expertise of management of LYNX Asset Managers. So it's a huge pleasure that we have this partnership. And we are now going to the Q&A session. It's my huge pleasure to accept all the questions and try to moderate the answers of my colleague in the panel. Thank you very much. I'll start to answer one of the questions that was made regarding what is Bison Bank track record with Chinese bonds. This is a very good question. Let me tell you, as I mentioned at the beginning, that Bison Bank has a huge expertise on the Chinese market because Bison Bank has a shareholder based in Hong Kong, based in China. And Bison Bank has participated during these 2.5 years in the bond issuance from Chinese companies, and the amount of the issuance was above $7 billion US. So This also demonstrates the capability of Bison Bank to know the Chinese market in terms of bonds, and also to be one of the providers of the information in terms of Chinese companies. So the track record of Bison Bank in bonds is a track record that is being is an example through what I've mentioned in terms of the DCM market. And also we have a lot of expertise not only inside here in Portugal through the wealth management company, to the wealth management department, but also our expertise comes from the research and the analysis that we currently do together with the Chinese entities that provide us the analysis, and we have discussions with them. Of course, those Chinese entities, they also support us on the information of the companies, which is very important for Bison Bank to create the analysis on the Chinese market. Then another question I have here, which I will direct to Mr. Antonio Aranhas, regarding who are the regulators for this China bond fund. I just want to highlight that this is a fund, this is not a bond, because there was some questions during the presentation that was regarding a bond. So this is not a bond. This is a mutual fund, a flexible fund. Therefore, is regulated by local entities. So, Antonio, can you answer this, please?
Yes, Francisco, obviously. As everybody know, the financial industry is nowadays a very strong and regulated activity. As well, in this line, obviously, this fund is based on Portuguese rules and regulation coming from the Portuguese Securities and Market Commission, and that follows the ESMA, the European Security and Markets Authority. So we have in both through two supervisors, the European and the Portuguese Market Commission.
Very good. Thank you. Another question coming from by email is, are the interest payments fixed or floating? So I send this answer to Pedro Rodrigues, please.
Well, the fund, once again, and following your comments a few moments ago, we are presenting a fund and not a specific bond. So the fund will be a diversified portfolio of different issues. And the characteristics of the fund, it's an accumulation-only fund. So the fund will not distribute any dividends. It will accumulate all the yield payments that the different issues will bring to the fund, and therefore this will be accumulated and reinvested in other issues. So answering the question, this is an accumulation-only fund with no specific and timely distribution of dividends, and therefore the only it will be appreciation of the share price that will represent the return to investors.
Okay, thank you very much. Another question that is sent by the participants is regarding how will the bond, it's not a bond, it's a fund, be affected if the currency has any type of movement? It's a very good question. Let me tell you that the fund does not hedge the currency exposure. So the fund will be exposed to the currency volatility or the currency movement during in the market. So this is very important for all of you to know. What is the fund exposed is to full Chinese bonds, being corporate or being sovereign, and the investment inside the fund is in 3 currencies. It's going to be in euros, dollars, and yuans, renminbis. So the currency exchange will impact the units of the fund. Another question I have here is a question that it's a generic question, and I send it. I wanted to ask Pedro Rodrigues, which is a generic question regarding: is bonds the right investment during COVID?
Well, It depends. It depends also on how affected each country is from the pandemic, and in which stage we are. We know that without going into many details, that the fast response from the main central banks and from authorities from developed countries, the first reaction to the shutdown of the economies was to cut interest rates very sharply, and therefore usually, as you know, bonds profit when interest rates go down. And now, therefore, I realize there could be a concern in terms of if interest rates in the future start to increase again and regain normality, that bonds might be negatively affected by this movement in interest rates. Nevertheless, of course, that is true, and it's something that it's the cause effect of the prices of bonds. But I would like to explain that the decrease or the cut in interest rates that we saw, for example, in the United States and to a less degree in Europe, were not followed by the Chinese authorities. The Chinese authorities have other means and measures that they put in place to face the shutdown that China experienced in the first quarter of last year. So now, as economy is recovering and started to recover before the US and Europe and other geographic areas, it's still on path to a normal functioning economy with a normal growth rate that we experienced before. So that effect of COVID in the near future, I think, will probably be less positive in the US and Europe regarding China. And the other thing I'd like to mention is what I explained in the presentation. It's as China moves from being a developed country to being from an emerging economy to a developed economy, the spread differential between what we see now, China issues and US or European issues, will tend to decrease, and therefore this will be beneficial for issues from the Chinese bond market.
Very good, thank you. Another question, which is I direct to Rita Neves, is and it's a question that was already mentioned during the presentation, but I believe it's worth to point it out again. Is how risky is the fund?
Thank you, Francisco. So the fund is a typical bond fund. Its risk is a level 4, which means that you have a volatility between 5 and 10%, and as the conventional risks of a bond market, of flexible bond funds, which are credit risk, currency risk, because the fund, as Francisco told, will run the currency risk, not hedge the currency, and the issuer risk and the variation of the interest rates as a bond fund. So,
very good. Another question for you, Rita Neves, is, and I believe that here it's very simple. It's a question that what's the current percentage of foreign investors in the fund compared to Chinese investors? I believe the fund only invests in Chinese bonds, right?
Right. The fund, I didn't understood very well the question, because in terms of the fund will be launched. So from now, we don't have a percentage of the Chinese investors or foreign investors. In terms of assets, the fund just will invest in Chinese corporates or issuers. So it's completely Chinese.
Okay, perfect. More questions.
Dominated in dollars or yuans or euros.
Okay. Very good. Another question here. This is for Pedro Rodrigues. Chinese bonds are sovereign guaranteed bonds?
Well, as guaranteed as all the other developed world issuers. So as you know, this usually is attributed by the rating agencies, as I also explained in the presentation, as Chinese authorities seek to open up the market and have been doing that for the past 5 to 7 years. Of course, they have to adapt to what are the international standards. So there was a gap that existed between the standards of the local domestic rating agencies to the international ones. And if we think of the three big ones, Standard & Poor's, Moody's, and Fitch, they all have different denominations, but they all have basically the same risk level in terms of ratings to the different issuers. And the Chinese government bonds, they stay up high with all the other main countries in the world in terms of ratings. So it's not guaranteed, but it's very difficult to imagine that a country like China would default. Like it's hard to imagine that the US would default, or Germany, or any other country of the same level of ratings. Of course, when you think of countries that have much lower ratings in the emerging market space, things are different. But this is not the case in China. And as these international rating agencies move to have local presence in China and move to cover more and more the issuer universe of Chinese bonds, all these standards will come together, and this will provide an assurance of the level of rating and the level of risk that each issuer will have in the Chinese domestic market. All the issuers that invest or that issue using the offshore market, they already have the international rating agencies' ratings. So if an issuer, a company in China wants, or if the government wants to issue a bond in dollars or in euros, it has to go through the international rating agencies, and this is already done. So this is something that will be more and more similar in the future, and will provide a different transparency to the Chinese onshore bond market.
Okay, thank you. I have also several questions.
Just to complete Pedro's answer, and remember that by prospect, the fund just can invest up to 10% in non-rating assets. So it's quite
very good. Very good. I have several questions here regarding how some people that are in the webinar, how they can subscribe the fund. So the question goes to Nuno Correia. If you can give more details, because I believe you gave some, but if you can give more details about these people that wanted to subscribe the fund.
Sure, of course. Thank you very much for the question. Pleasure to answer this question. It's the first thing, you need to open an account with us, and to open the account with us, we need you to fill our forms. We can send you, well, it doesn't matter where you are, we will send you the forms by email. We will help you with the account opening process, but also you need to have a Portuguese tax number. If you don't have yet a Portuguese tax number, we can give you some local contacts of legal representatives that can do that for you. And afterwards, you will be able, after transferring the amount that you want to subscribe to your account, you will be able to do the subscription by filling a subscription form that we will send also to you by email, and you will revert to us also by email, signed, and that's it. That's very simple. But the first thing to do is to open an account with us. Thank you so much.
Okay, thank you. There's another question which was already answered. Is there any FX hedging policy of the fund? No, the fund does not do any hedging. I don't see any further questions, so not on the email side. So I believe, let's wait a few more minutes. More questions, please. if you have it. Anyhow, you can always contact Bison Bank through our website, bisonbank.com. To the website, you can also contact LYNX Asset Managers through their website in order to provide questions about the fund, also to provide questions and subscription needs of the fund. You can contact also Nuno Correia. And I believe, yeah, we have, let me see here on the Q&A side. There's a person making question, what are the fiscal implications of investing in Brazil through a Brazilian person? Well, here it's a question that also you need to see your tax needs in Brazil. But if you open an account with Bison Bank, you'll be non-resident in Portugal, and that has some tax benefits. And that can be clarified by the client management team, by the head, Nuno Correia. Thank you very much, all. It was a very good webinar with a very good presence of people and questions. Anything else, Bison Bank it's at your disposal. And I believe also, of course, LYNX Asset Managers, right, Antonio?
Yes, of course. Thank you. Thank you to everybody.
Thank you very much. Thank you all.
Thank you.